Imagine turning your investments into a gold mine simply by letting them grow untouched for years. Sounds too good to be true, right? Well, what if I told you there's a tried and true investment strategy that's been doing for decades? Intrigued? In today's video, we'll be diving deep into the world of coffee can investing, the buy and forget strategy that has the potential to skyrocket your financial success. But is it the best long-term investment strategy for everyone? Without further ado, let's get started. The concept of coffee can investing is a long-term investment strategy in which investors buy a set of companies and hold them for years to profit from the compounding effect. The strategy is known as buy and forget because investors put money into businesses performing well while not actively buying or selling them. Coffee can investing seeks to generate sizable profits over the long run by investing in solid, stable businesses with long-term growth potential. The tactic has advantages that make it a desirable investing approach. It might withstand short-term market turbulence and produce minimal transaction costs and taxes. It does, however, require some expertise and research. By the way, the idea was developed in the United States, where it has had enormous success. Investors keep the chosen stocks in a coffee can or other secure location and neglect them for a protracted period. The approach is a low-risk trading strategy, so do your homework and select high-quality stocks with good fundamentals and growth potential. So if you're ready to adopt the buy and forget method with your investments, you could potentially generate big profits over time. But how did this concept obtain its name? If you've ever wondered where coffee can investing came from, here's the scoop. It has an intriguing backstory. The person who actually came up with the phrase is Robert Kirby, a portfolio manager at renowned investment management company Capital Group. Kirby tells the story of a woman who came to him for guidance on stock market investments after receiving an inheritance. The woman agreed to invest after Kirby identified a few high-quality equities that, in his opinion, would perform well over the long term. But what happened next was surprising. Kirby spoke with the woman a few years later and inquired about the performance of her investments. He was surprised to hear the woman's response that the stock certificates had been placed in a coffee can and kept out of sight. Kirby was taken aback and questioned why she hadn't sold any stocks. The woman retorted and that she wanted to let the stocks grow naturally without meddling with them. Kirby was delighted with her concept and began calling this method of investing coffee can investing. It is an exciting story emphasizing the value of investing with a long-term perspective. The woman's choice to let the stocks increase over time rather than continuously buy and sell them turned out to be wise. Since then, many investors have adopted the buy and forget strategy due to Kirby's story. So, what can we glean from this story? Is coffee can investing the best strategy for you? It might even be among the greatest, but how does it work? You must fully understand this investing approach by now, but let's dig deeper for a better understanding. It is a simple but successful technique where you can buy high-quality equities and keep them for a long term. But you might also wonder, what distinguishes a high-quality investment? The secret is seeking businesses with a distinct competitive edge, a long-term business plan, and a steady revenue and profit growth track record. These businesses stand a good possibility of long-term success. Okay, so how do we minimize risk while ensuring long-term gains? The fix is diversification. By diversifying your assets, you can reduce the effects of sector-specific risks and seize market opportunities across several different areas. Holding your stocks long after choosing them and diversifying your portfolio is essential. This is when compounding comes into play. You can benefit from compounding, in which your gains generate further returns by hanging onto your equities for longer. It is a straightforward idea with a lot of potential for long-term gains. The reason for holding your securities for a more extended period is that short-term market volatility can induce panic and lead to missed opportunities for long-term gains. You can stay the course and achieve your long-term financial objectives by resisting the urge to sell during the market swings. Investing in coffee might look too good to be true, but it is actually a tried and true method that has been profitable for many investors who have tried it. It involves perseverance, dedication, and a long-term perspective, but the rewards can be substantial. So how about a coffee can portfolio? Typically, a coffee can portfolio includes 10 to 15 companies from various businesses and sectors. These equities must come from high-quality companies with a history of sustaining their growth and profitability over time. Now, coffee can investing might be your best strategy if you're interested in creating a portfolio that can increase in value over time. But well, there are a few steps. The first step is the identification of high-quality stocks. Finding high-quality firms with a track record of generating robust returns and a durable competitive advantage is a first stage in creating a coffee can portfolio. So, how do you go about that? Look for companies having a market capitalization of at least 100 crores and a 10-year ROCE of more than 15%. That denotes a high-caliber company with a competitive advantage. The next step is to determine the investment amount. This step entails deciding how much money to put into your coffee can portfolio. Any amount is acceptable, but to take advantage of dollar cost averaging, making small, regular investments is recommended. By spreading out your investments across time, dollar cost averaging helps lessen market's volatility's effect. The next step is to invest in the portfolio and hold onto them for a considerable amount of time, without actively managing them after discovering the high-quality stocks and establishing the investment amount. You will benefit from compounding by keeping your investments long-term, resulting in significant returns. Finally, keep track of the portfolio. To ensure the companies in your coffee can portfolio satisfy your investment criteria, it is crucial to monitor them regularly. But keep in mind, avoid getting too engrossed in momentary market turbulence. Coffee can investing advocates keeping hold of top-notch equities for an extended period and letting them appreciate. But like any other investment technique, there are advantages and disadvantages. But before that, if you want to stay updated with all of my financial planning and budgeting advice, make sure to subscribe to my channel. And while you're at it, check the description for a link to my monthly budget trackers. They'll make managing your money a breeze. So, go on and hit subscribe, and let's make your wallet and future self proud. Now, let's get back to the topic. The coffee can strategy enables you to build a portfolio of high-quality companies you can hold onto for a very long period, while also enjoying several advantages. It primarily reduces your trading expenses. Holding onto your stocks for a long time will help you avoid trading frequently, saving on brokerage costs and commissions. You'll be able to keep more of the money you worked so hard for. Second, using the coffee can investing strategy can reap substantial tax benefits. Long-term investments allow you to drastically minimize your tax obligations, while short-term investments typically result in increased tax obligations. This way, you get to keep more of your money. Investing in coffee cans can also help you stay away from volatile markets. Long-term holding of your stocks can help you avoid short-term market volatility, saving you from panic selling during market downturns. Moreover, the stock market offers a better return than other investment options like fixed deposits and real estate. Long-term returns from a coffee can portfolio can be enormous. You only need patience and discipline to expand your riches to unbelievable proportions. The strategy is also a wonderful technique to gain wealth appreciation. Your stocks will increase in value over a decade or more if you don't touch them. Without active selling or buying, capital growth is a foregone conclusion. So, why wait? Begin growing your coffee can portfolio today and reap the benefits of tomorrow. However, there are some drawbacks to coffee can investing. If you're thinking about developing a coffee can portfolio, you should know that there are some advantages to this investment approach, but there are also some disadvantages to consider. Let's look more closely. First, coffee can investing is a passive method with limited flexibility. Well, you cannot change your portfolio of high-quality stocks after you have chosen it. Since the idea entails purchasing and holding stocks for an extended period, making the wrong investment selection can also destroy capital. Second, choosing the appropriate stocks for a portfolio can be difficult. To ensure that you invest in stocks with a track record of high returns and a sustainable advantage over their competitors, it is necessary to employ specialized knowledge and do in-depth research. Ask yourself, do you have the time and expertise necessary for this? Timing risk is the last concern to think about. Investors risk missing out on short-term gains by keeping stocks for a long time without selling them. Coffee can investing may not be the best option for everyone. so examining its benefits and drawbacks is critical to see if it fits your financial goals and risk tolerance. And that's a wrap. Evidently, the strategy has lots of benefits. So what do you think? Is Copycat investing strategy the best long-term investment strategy for you? Will you be trying it out for yourself? Share your thoughts in the comments below. That's all, and remember to hit that like button and subscribe. See you in the next video.